I will go to Alexander. And Alexander, I'd like you to maybe to share your views on some of the steps, some of the ideas that you have in terms of how to de-risk this infrastructure project, domestic or cross-border, so that those projects will become attractive to institutional investors. Because, you know, at the end of the day, some of the risks are perceived, but other risks are actually actual risk, and they need to be mitigated or allocated to the best parties able to manage them. So what are some of your thoughts on this question, please?
Thank you very much, Alain. I want to really start on a very basic level, very simple level. I was part of a team yesterday, chairing a session at a table, and part of the reasons, part of the issues they raised was very, very basic, the legal environment. So you say, oh, what's wrong with the legal environment? And I think the legal environment is very important. We need to improve it. But it's not just improving it, it's how you improve it. And I want to start with the three regional or cross-border investments as an example to sort of ease me into the kind of changes we need. You all know about the Kenya-Uganda railway concession. This was a very big project for us. Kenya and Uganda were coming together, concessioning out a railway. We already saw that there were challenges when they were doing it. There was no single rail asset owning company. There was no single operating company. There was no single holding company to even hold the land. And during the procurement process, the first operator turned out to be, to say the least, basically a fraud. So that already can tell you that there were challenges in there. We now have one where you'll be involved in the next stage of your life at Africa 50, the SGR. This is a $10 billion within Kenya, and another $4 billion to reach Kigali. Again, there's no single holding company, no single operating company, no structure that we can see, but if you're an investor, you can come in and participate. Lastly, I want to give one example of an oil pipeline, and my colleague here from LabSet has already mentioned it. We have an oil pipeline planned from Lamu all the way to Southern Sudan and Uganda. We've been drumming up support for it, and the last 2 weeks or 2 months, basically that has fallen apart. Now Uganda's chosen a route via Tanzania, so you'll have a Tanga-Uganda oil pipeline. What was Kenya's response? We're also building our own. So you have regional cross-border pipelines competing with each other. And the head of state of Uganda gave a very good example, saying that if you have got 2 chicks that have hatched, you will not know which one will be a good runner. So you let the 2 chicks grow, you feed both of them. We now have 2 regional pipelines running from east to west in the same region. So that brings me to the kind of changes we need, the legal environment. We need more legal certainty. We need more policy certainty. And I would say we also need to enforce laws better. Enforce better laws between investors equally, fairly, and not cozy up, or you don't need to cozy up to the government to be seen as somebody who can basically invest in the region. And I believe this annual tinkering with our laws via the annual finance bill is something we need to stop. I believe one time Canada had a system where every 10 years they overhaul their laws completely. They don't tinker every year. Today the rate is 8%, tomorrow is 10, 20%, the next day is down to 15. Every finance bill, every year, brings in new laws. So if you can give investors policy certainty, legal certainty, the laws will not change at the whim of every finance minister coming in. So I think that is the first step. And I don't want to leave this point unsaid. Most of English-speaking Africa, our company laws were based on the UK 1948 Act, completely archaic, completely outdated. I think we've just now revised our law in Kenya, our Companies Act. I believe maybe Uganda is still far, Malawi, Zambia, they're probably still in the 48 Act. Because you now need new structures to be able to have a regional company. You can also cross-list across the board. You can have robust holding company structures. Most infrastructure that is cross-border might require holding company structures. The second change beyond the legal environment is basically increasing the supply of local finance to local partners. This was raised yesterday as well. The local partners cannot come to the table. A, they're too small, they don't have money, they don't have debt or equity capital. So if you increase the supply of finance to the locals, then they can also meaningfully step up to the plate. And I think in Kenya, we are championing one policy innovation of consolidating our banks, probably following our Nigerian brothers. Our banks are too small. None of them can actually come up and give you $250 million and above. We also seek to ease, or we should ease, the listing requirements. Currently, our capital markets are listing anything, whether it's a commercial bond, whether it's an IPO, is like pulling teeth? It really is difficult. And I believe the NSF person from Uganda mentioned that they only have 8 listed companies. We only have 54 listed entities. And why is this important? We have seen you at ADB. ADB was one time proposing to raise a domestic bond in Kenya shillings on a domestic market to lend regionally. So that way ADB can actually finance the local currency part of regional infrastructure domestically. We have also seen Shelter Afrique raising money domestically for possibly regional infrastructure investments. So I believe those 2 areas increase the supply of local finance to local partners and modernize our laws. We cannot have this 1948 UK Acts. We now need very innovative structures. I believe the CEO of PTA Bank mentioned that they also go all the way down to financing SMEs as well. Now, SMEs in Kenya now can actually form a limited company with one director. You can meet virtually if you want, simplify reporting requirements, all of this to make sure local partners are strong, the legal environment is strong for investors, they can form creative or innovative company structures, and therefore they can actually come up and do regional infrastructure. I believe those 2 areas is one I would like to share with you.
Thank you very much, Alexander. I think I particularly like your views on improving the legal and regulatory framework. Certainly, it's very important. But I'd like to highlight and actually agree wholeheartedly on the need to have a more local participation in our infrastructure project in Africa. I think it's not discussed enough, but for me, it's a huge manner in which political risk can be mitigated by having strong local participation, ownership on the project. Now, because those projects are capital intensive and there's not necessarily enough capital in the local and regional market, we really need to figure out ways in which we can bring more participation of local investors and local sponsors in those projects, I think.
Doing business in Africa, you can't afford to be without Africa Investor.